Welcome to the McNees Corporate and Tax Law podcast series. In this video podcast, attorney Jacquelyn Kunkel addresses the newly introduced pass-through deduction of the Internal Revenue Code and explains how it impacts independent contractors. Ms. Kunkel practices in the Corporate and Tax Practice Group at McNees.
Today, I'm going to talk about a new code section that was introduced as a result of the 2017 tax reform. It is a complicated section, but today I'm going to keep it relatively simple and talk about how this new provision affects one group of taxpayers, independent contractors. The Tax Cuts and Jobs Act of 2017 created a deduction for taxpayers with pass-through business income. The relevant section of the Internal Revenue Code is Section 199, Cap A, and to most people, this provision is known as the pass-through deduction. For our discussion today, I'm going to assume that the person performing the work, in this case, is properly characterized as an independent contractor and is properly receiving a Form 1099 from its payer. First, what is a pass-through business? A pass-through business is not subject to income tax at the entity level. Instead, the business income is passed through to the business owners, and the income is taxed at the owner's individual income tax rates. Pass-through businesses come in several varieties. Sole proprietorships, which are unincorporated businesses with a single individual owner. Typically, this individual is a self-employed individual. Partnerships, which are unincorporated businesses with two or more owners. And S corporations, incorporated businesses that meet very specific requirements outlined in the Internal Revenue Code. Note, pass-through businesses also include limited liability companies, taxed as partnerships, or disregarded entities. Next, I want to discuss how the pass-through deduction is calculated generally. A taxpayer's pass-through deduction is equal to the lesser of 20% of the taxpayer's eligible business income or 20% of the taxpayer's taxable income, calculated without regard to net capital gain and to the pass-through deduction. A taxpayer's eligible business income includes income derived from a qualified trader business. According to the code, a qualified trader business does not include the trader business of performing services as an employee. Therefore, wage income is not eligible for the pass-through deduction, and thus the taxpayer must be treated as an independent contractor and not as an employee to qualify for the deduction. Now let's look at an example to illustrate how the pass-through deduction for an independent contractor works. Before going through the example, I want to mention that the pass-through deduction is subject to additional limitations based on the taxpayer's taxable income. Going forward, I will assume the taxpayer is filing as single and does not have taxable income over $157,500 for the year. This example illustrates two different scenarios. The first calculation shows how an independent contractor would calculate his or her total tax liability in 2017 under the old law. The second calculation shows how an independent contractor would calculate his or her total tax liability in 2018 under the new law. Both scenarios assume the independent contractor has gross income of $100,000 a year. While there is a slight difference in the calculation due to changes in the standard deduction, the largest advantage comes from the pass-through deduction. In this case, the lesser of amount is 20% of the taxpayer's taxable income, which leads to a pass-through deduction of approximately $16,000. As you can see in the example, under the new law, the independent contractor saves a few $1,000s in total tax liability. As I mentioned before, Section 199 Cap A becomes significantly more complicated once the taxpayer has enough taxable income for the additional limitations to take effect. Additionally, the pass-through deduction is currently set to expire for tax years beginning after December 31st, 2025. However, at least for the next several years, the pass-through deduction may significantly lower an independent contractor's total tax liability. If you have any questions or require any assistance structuring your business to account for this new valuable deduction, please send me an email or give me a call.